In today's video, I'll be going over how to read a company's balance sheet. This video should be helpful for newer investors who are just learning how to analyze companies or experienced investors who want a refresher on reading a balance sheet. So just to start, there are three main parts of the balance sheet that you want to look at, and the three big things on the balance sheet. So the first is assets, which is things that the company has that they could sell, and how much money they would get from selling those. So that is what the assets are. The liabilities is the money that the company owes, and so all of the liabilities will be money that the company needs to pay out in the future. And then equity is how much money has been invested in the company and the retained earnings. And so equity plus liabilities should equal assets as well. We're looking at the Alphabet Inc. balance sheet. That's the parent company of Google. And so we'll just start right off. The main three things that we're going to look at are assets, liabilities, and then equity. And there are different things under each of them. So under current assets, you have cash and cash equivalents, which is how much money the company has in cash. Then you have marketable securities, which is the value of the securities that the company holds that could be sold. And then they add that up. For Google, it's $92 billion in cash, cash equivalents, and marketable securities. And then accounts receivable is the money owed to the company by its debtors, pretty much. So for Google, that's $12 billion. Then you have income taxes receivable, so that's just taxes that they are owed. And then inventory is how much money the company has in its product that it's going to sell. So I know Google sells phones, so the phones that they have built but have not yet sold would be under inventory. And so prepaid revenue, share expenses, and other assets. So that's pretty much just things that they've paid in advance. And so for Google, that's $3 billion. And then it comes out to their total current assets of $108 billion for Google. And then so here are some other non-current assets. This is just pretty much any assets that they're throwing into non-current assets. And that's under here. They're not very specific with that on their balance sheet. But since it's a relatively small number for Google, it's not super important what they are. So then non-marketable investments are investments that they've made, but they couldn't really sell quickly. So like I said, these all pretty much are just grouped in under assets. So the next thing would be property and equipment. So that's pretty much the property that they own and the equipment they own to manufacture things and all of that. And for Google, that's $35 billion. Then intangible assets, that's things like patents and that kind of thing. And so for Google, that is $3 billion. And intangible assets are things that couldn't really be sold that easily. I mean, they theoretically could, like patents have value, but a lot of intangible assets would be very difficult to sell. And then goodwill is pretty much just the value of the brand of Google and all of that. So for assets, you can see Google has $172 billion total in assets. So that's about how much money Google would get if they were to sell everything that they owned. So now on to liabilities. So current liabilities are liabilities that they have to pay in the next year or so. So for accounts payable, that's money that they owe again, and that has to be paid in the next year. So all of these pretty much just are liabilities that need to be paid in the next year. And then they add them up, so $15 billion in liabilities that need to be paid in the next year. And then long-term debt is debt that needs to be paid sometime in the future, not in the next year. So for Google, that's about $4 billion. And so all of these are pretty much just debt that needs to be paid over the long term. And so what you want to look at again is just the total long-term and total short-term liabilities. So total liabilities for Google ends up being $27 billion. And then again, shareholders' equity is pretty much the money invested in the business and retained earnings. And so for Google, that right now is $144 billion. And then they add up the liabilities and stockholders' equity. And that should equal the assets of the company. So like I said, assets should equal liabilities and stockholder equity. So we can see that for Google, that's $172 billion. And under assets, it's $172 billion as well. So if those aren't equal, then I guess there's an accounting error or something made, which I think would be unlikely. But like I said, the general three things that you need to remember are: assets is things that the company has that they could sell to get money. Liabilities is things that the company needs to pay off in the future. And stockholders' equity is the retained earnings and initial money invested into the business. And so what you want to make sure is that the company isn't swamped with debt, and that they have enough cash and marketable securities that they should be able to continue to fund their operations. So the balance sheet needs to be used with the income statement and the cash flow statement to make sure you get a whole picture of whether or not the company is going to be able to pay off its debt using cash flow that's coming in. But it's also good to see that they have enough cash on their balance sheet, at least for Google, to almost cover the current liabilities. So that is good to see. So you just pretty much want to make sure on a balance sheet, what you want to look for is low debt and high cash, pretty much, and that will be a good position that the company can be in. So, like I said, the balance sheet must be used with the income statement and the cash flow statement. That way, you can see how much money the company has coming in that they can use to pay off debt and all of that. So, the balance sheet is really just 1/3 of the documents that you need to look at when you're evaluating a company. And I've already made a video on how to read an income statement. I'll be making one in the future on how to read a cash flow statement. So, just look out for those. I'll link them in the description once I am done with them. Thank you for watching. If you enjoyed the video, leave a like down below. I make lots of videos on the stock market, so if you're interested in that, consider subscribing.